Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Thursday, July 18th, 2019. This will actually be an all-inclusive video, members only, subscriber only video, which I'll cover some trade ideas, things that stand out, some of the things we've watched recently, and been either in trading actively or waiting for a setup. In no particular order, I'm just going to start out with the ag commodities. I don't want to forget those. I've been talking about them quite a bit recently, and they kind of stalled out a little bit after the first rally. And we had, I'm going to start here with wheat, by the way. I should usually tell you what I'm talking about first. And if I don't, usually, depending on which charting program I'm at, it's usually up here in the upper left-hand corner of the chart. This is ZW. These are wheat futures. Keep in mind, these don't. A lot of the ag commodities don't trade around the clock, or at least, they pretty much shut down during the day. Coffee, wheat, and some of those. So you're not going to always see the charts moving around when I do these videos on certain ones of these. And keep that in mind too. And I've said that before. If you trade JO, for example, the coffee ETN, you're going to notice it comes to a pretty much a crawl every day about 1:30 or so Eastern time, I think it is. That's when coffee futures stop trading. They shut down for the rest of the day. They trade pretty much overnight. So just keep that in mind too when trading the ETNs. But remember, the ETNs track the futures. So although I will always share the comparable ETF or ETN if I'm covering futures, if you really want to know where it's going, you want to time your entries and exits, you need to look at the futures, especially on ag commodities, because this is what the big boys, the institutions, are buying, not JO and KC. Doesn't really hold true in gold, GLD. A lot of institutions, hedge funds, pension funds will buy that. It's such a liquid ETF, but on a lot of the smaller commodity ETNs, that's not the case. So you want to align your analysis with the charts of the futures. And investing, if your broker if you don't have a futures account, or even if you have, let's say, TD Ameritrade, they give you free futures quotes when you have an account with them, even if you're not trading futures. I believe that's the case. The account I just leave there to throw a few bucks in, and I don't even trade there. I just leave it to get the charts. Actually, I take that back. I have several custodial accounts, educational accounts for my kids, covered LESAs, where you can hold and trade stocks. But I digress. Back to this ZW wheat futures. You can see that we've come down now to that 493 level. If we take a look just recently, what was this on? July 11th, on the charts I'm watching today was ZW, and I said, we didn't have any buy signals at the time, but we did have divergence forming, and we were coming down close to support. So I had us either popping, at that point, or any time up into down into about that 492 level. And then later that day, we did pop right after I posted that, ran up to resistance, but that we had a brief overshoot, and again, so that was the same day. July 11th. I posted that a little bit later on, and now back to today's chart. This is it. So you can see after that brief pop there, and that's why you sometimes want to scale in. We went down, and again, so everything, the case that was made back then, for more, again, it wasn't a hard buy signal. There's kind of two things. Somebody even asked me that today on the stock market, for a short. What would you see? What would be the things? And my answer to that, for the most part, was, at many points in time on a stock or the markets, they are setting up in a very clear, well-defined chart pattern. It could be, any type of technical pattern, bullish or bearish, with a clear, unambiguous breakout point. There'll either be a trend line or a horizontal price level, and you wait, boom, and when that triggers, you get confirmation on an impulsive move, and that's a precise entry. That's what I call a hard entry. And there's other times where my answer to that question was, what would it take? Pretty much, I said I'll know it when I see it. In other words, right now, we've had several trendline breaks, support breaks in the market. I'll get to those at the end of this video and touch on those. But with the uber low volume, we're in the summer doldrums. We're seeing whipsaw signals a lot, and in the breakdowns that we have that have stuck, like the break on the trend lines on those 60-minute charts of the futures and SPY and QQQ recently, although they're still in play. the selling afterwards has not been impulsive. So basically it's a grind fest in the markets, and it's going to take a little bit more than just a breakdown of a certain level in any one or even all the indexes right now. In other words, need a little better confirmation. So again, maybe that'll come tomorrow, maybe it doesn't come for weeks. And until then, continue to trade what is tradable, and that is commodities, precious metals, there's quite a few individual stocks that trade well to the technicals, but you get wrapped up trying to trade the stock market when it's in a period of low volatility and low volume. Good luck. It's like trying to squeeze blood from a stone. So back to this chart. That's it. I can't promise you it'll play out, but I can tell you, I promise, I believe this is an objective entry. Your pullback to support, you have bullish divergence. The same reason, I was bullish and long wheat back here after the divergent low, right here after the divergent low, and you can see those are good for either tradable rallies at least, or we got a pretty big trend. We were long the bulk of that run via the wheat ETN WEAT, and let's just look at that chart because I know that's what a lot of you would be trading. This is wheat. Remember we hit that, I had the final target here set a little shy of that level there based on what I saw in the futures. So we hit the third final target, we got out, went up there, and as I said, there were a lot of things reflected in the 60-minute charts and in the futures. It said we'd probably get a pullback. Not to mention that is a very, very solid resistance level right there, about $6 or so on WEAT. And so that's it. So we've had a correction, plenty to work off the overbought conditions. Remember, we were overbought right here. We had a very strong rally, and then we worked our way down. We fell back to T2, which at the time I said, and I still believe it was an objective entry. It didn't pan out so well. Actually, it was good for a quick bounce, tradable bounce, but so far we cracked below it. However, again, looping back to what I just showed you, going back about a week or so on the futures, I said here, this is more important to me. This support level is infinitely more important than that comparable support level I showed you on WEAT, because these are wheat futures. Again, this is what the market is trading, the pros, the farmers that are hedging, and selling their grains, things like that, and the commercials that take the other side of the trade. So that's that. Can't say much more than that. It either pans out or it doesn't. Let's go back to wheat chart and just look at that. So I need to give you targets, of course, and let me just see what the 60-minute looks like before we do that. There it is. I figured I'd see something there that would look similar. So you have the divergence there on WEAT, pretty much flat line there, about equal lows on the RSI, higher highs on the PPO, and here's a line I haven't updated this chart in a while. I didn't get a chance to update this before the video. See, not super well defined on WAT, and there's all the divergence I told you at the highs recently that was warning of the correction that just came, and that's again why we were out of wheat at the top there, and now potentially recycle back in for the next swing trade. Where do we go from here? Well, I would say if we can reverse, and I wouldn't give it a lot of downside. That's a pretty good support level. You can allow for a little bit of overshoot. Sometimes they want to run the stops, but not too much. If we do reverse, I would expect at minimum a run back up here to about that $6 level, and then I think beyond there I'll have to sharpen my pencil to give you some targets. But let's just say if we can continue to trend up, if we're in a new bull market in wheat and there's more upside to come, there's not any reason we can't come back and at least see these 2018 highs right here, and that that in itself is a pretty good size move, 30 or so percent. All right, next one up would be a related trade, and there are other commodities. I'm not going to get into them all in this video. There's others I like, but I'll just stick to the ones that we've been focusing on. One of those is coffee. Now, that one I've left on a very long-term target. JO was both a swing trade and a long-term trade, i.e. trend trade, investment. In other words, we went long somewhere here after the bullish falling wedge breakout, and nothing goes straight up. Some things do. Lately the metals are, the precious metal stocks, but a lot of things work their way up in waves, just like they work themselves down in waves when you're in a downtrend. And so far, that's what this looks like it is. And again, I've highlighted here, we had some pretty good support recently that coffee has been holding on this pullback here. We hit our third target, at which point, just like back here at T2, I expected a correction. As an active trader, I was able to get out of those, the longs and recycle back in. And I still think that now is an objective time for the next thrust up. Let's look at KC, coffee futures. The level that I've been highlighting recently was right here, about 105. And so far you can see by the lines there, there's reactions from above, reactions from below, reactions from above, and quite a few reactions from above. So far it's holding up, and I want to see that hold. If it goes much below there, sure, you get these little brief stop raids, little spikes below. And that's why you never set your stop. If 105 is support, you don't put a stop at 104. You give it a little bit of room, at least I do. And so if that holds, and next stop here, we've already tested that 116. That's a big resistance level. And if that can get taken out, which I suspect, maybe if we run up there, we might get another reaction off it, maybe not, but I'm looking for a breakout above there, and that would open the door for the next major leg up in coffee. And then, of course, that would should correlate with my next target, which is currently the final target on the Joe ETN trade, 41.30. Although I always say this, because these ETNs, some do a better job than others. Joe does a pretty good job, not perfect, of tracking coffee prices, but based on whatever I see on the futures, I may revise that target. That means I might raise it, I might lower it, call the trade in early. I always do that in advance. I'll never close a trade after it's hit a level in reverse and say, oh, guess what, I'm going to close it out here. Does nobody any good. So unless I can get a post out to you guys first before an active trade hits a certain level where I'm going to revise a target, I won't do that. So as of now, let's just leave it there. And first things first, I mean, we have to hold this support and start to power back up and then take out those previous highs, which correlate with that. What was it, 116 level? I think I said on coffee futures. So there's JO. Let's just now let's roll into the metals. I've posted quite a few updates, including a front page update on silver. In the recent videos and for a long time, I've been talking about 15, 30-ish level right there as being a very key support level. Again, it's not just a random number. You can see a lot of reactions. This was a little brief whipsaw down and back up above, but for the most part, that 15-30 level did a great job of acting as support. And then once broken, came back, tested it, and that's all she wrote. Came up here, tried at it again, failed. Tried it again, failed. Now we hit it. I'll tell you, based on the long term, what's going on, we broke out on the weekly. We still have to close, above that weekly trend line. I'll get to that in a second by tomorrow, which I suspect. But at this point, a couple thoughts. I've made it clear, very clear, that do not underestimate the precious metals, especially the mining stocks, on just how overbought they can get. I've had a couple people say thank you. You pointed out that XYZ, a lot of those silver and gold mining stocks I've liked recently, particularly the silver stocks. I had at least one person say I wouldn't have bought it. It was already up 5%, and I did. And I'm glad. Now they've made 3-4 times that they thought they were chasing. And like I said, I've seen this movie play before. When the charts are in alignment and you start to run, this can run. This is just the metal itself. The miners can really explode. They're the ones, like I said, this was silver was up 2.3%, the ETF, and a lot of I'll get to those in a second. My favorite miners were up, high single to some of them in the double digits just today alone, with 30-40% gains in the last few weeks here. So that's where the juice is. As I always say, if you get the call right on the metals, the miners are essentially just a leveraged play. But I want to say this, that the miners will follow the metals. That's, you want to keep an eye. Don't trade the miners blindly, even if you don't trade silver or gold because they're quote unquote boring, because you're only going to get 2%, 2.5% today when you can do 10% or more in some of the miners. You want to keep an eye on this. So basically, going back to, let's see, I had a chart that I put up on the front page. We had this bullish falling wedge. This was a chart posted back here on, what was that, May 9th. Bullish falling wedge pattern, and broke out, rallied up, and we took out the downtrend line again. So that That was then. This is now. Get back to where we're at. And this is a momentum fueled overshoot. We shot right through that trend line as if it wasn't there. Keep in mind, that's also a breakout on the more important weekly chart. Here's that same trend line, or a comparable one, I should say, that I have off the 2016 highs. And look at that big, beautiful green impulsive candle. So I'm going to keep this very simple. This is a very powerful long-term buy signal. It's confirmed with that very high. I don't know if you can make it out below. There's a huge volume bar, biggest volume bar we've seen in many years, if not decades, on silver, on SLV. So that is certainly a sign of confirmation, along with the that bullish candle right there. That has to still finalize tomorrow, but I really doubt we're going to drop anything more at big drop would at best bring us back to still keep us above the downtrend line. So I think I think it's safe to say the breakout's pretty safe. And then I had this 1521 target. Now, yeah, we are a little bit above that 1529, but if you've heard me say this once, you've heard me say it 1,000 times. This is what I call a momentum fueled overshoot. You had an explosive rally, tremendous upside momentum. You tend to overshoot a resistance level, which will ultimately prove to be the one that you stop at. So I'm not looking for the the whole rally to end here. Just all I'm trying to say is the odds for a consolidation are likely, even if we pop a little more tomorrow and even close above it this week, probably come back in and test that level, just like we did on gold. Remember, gold on the weekly blew by my similar target, and for weeks now, if not over a month, it's been consolidating above it. Finally actually broke out of the bull flag today. I'll get to that in a second. So that's it. I'm just trying to say that that looks good so far. However, do you want to chase it here if you didn't get into the metals or miners yet? And I get this often. There's people that and I get it. You sometimes second guess trades and you want to buy now. And the other part, now the flip side to this is what I was saying earlier, that these guys can continue to become overbought. I've seen it many times before. So, while I think the odds are very good for a reaction here, there's a possibility they continue to go up. So there's a couple ways to trade it. If you're a very active trader, you can certainly, be prudent to, like on silver, for example, to tighten up your stops really tight to protect profits, and then let it run. The trend is strong. No reason to take money out. You can put a very, very tight stop, and then that way, if we continue to go up tomorrow and into next week, you continue to build your gains. So otherwise, if we pull back, you give up very little, especially if you have futures. SI, the silver futures, you can control that trade and get stopped out in the overnight session. There's plenty of liquidity there to use a stop loss order. So that's that. And again, so whether we consolidate here or not, which would be my preference, but again, we have some pretty explosive chart patterns here. That would be the next longer term target up there, and of course some stops along the way. And about the midpoint there, about 1578 or so. Here, I'll give you the line now. I see some decent, some minor to moderate resistance there. So that's the longer term outlook for silver, and the near term being the fact that we're overbought, hit resistance. Gold, as I mentioned, oh no, I meant to pull up GLD. Gold, I've told you that's at level 130 was my big level, overshot it with a momentum fueled overshoot, pulled back, consolidated recently. These are weekly candles, so it's about a month or so, and then boom, today we broke out impulsively of the bull flag. So there's a potentially bullish scenario. So although silver is getting stretched, silver is also now playing that game of catch up. I started talking about that a few weeks ago in those videos where I covered that bullish falling wedge in silver and everything else. I said that of the two, that was my favorite because I believed it was poised for several reasons to play again what I call a game of catch up. I've seen it many times before. So that's that. Bullish breakout in gold so far, and if that sticks tomorrow, we build on that, then that opens a door in gold. I don't have a lot of resistance until my next target up there around 151. Doesn't mean we're going to get there overnight. It's just that's what it looks like there. And GDX, we'll look at that. GDX, nice move today, up 4.28%. Has now clearly taken out this first target resistance zone. You can see, similar to silver, like silver ran up, hit my today, and gold GDX, it did the same thing just recently. Remember, the gold was ahead of silver, as was GDX, the gold mining ETF. So we ran up, hit, this is my first target area right here around 25. had a little consolidation, a little bull flag type pattern, and boom, broke out, and that looks good as well. So takeaway again, if you're a long-term investor, trader, or even a swing trader, I do both. I wear both hats. I have IRAs, I have kids' college funds, I have my long-term accounts, and then I have my trading account, and I'll do both. So I might confuse the hell out of you. Sometimes I might say I've reversed a trade, gone short silver for a tactical pullback trade or gold, yet I'm still long that in an IRA or something. So I separate the two, and I want to be very clear. There's nothing that I see here that makes me want to close out any of those long-term positions right at this point in time. If nothing else, I'd be more apt to add to those positions. Like I said, and this is a breakout in gold and GDX today. Silver running into resistance, but that doesn't mean it has to stop there. All right, next up would be, well, I don't have anything mocked up here on the daily chart of GDX to show you. And we'll just take a quick look at what I call my Fave 4. These were the 4 silver mining stocks I posted back a couple weeks ago, and I've highlighted these, and then I covered some other ones in the videos, but the 4 that stood out to me were AG, and so far that just couldn't be playing out any better. Took out, was posted here before this downtrend line. I forget exactly where it's taken that out. This thing's run about 62%. I'll have to look where it was posted a few weeks ago, but it took out the downtrend line impulsively. Everything you want to see. Little consolidation in between. Now it popped the 829 target today, clearly put that in the rearview mirror, and longer term it still looks good. In fact, it just only relatively recently broke out. FSM, another one, had these intersecting downtrend lines. It's just a beautiful little chart here, and the way it's playing out especially. You have the impulsive move off the bottom on the divergent low, followed by a bull flag continuation pattern, followed by a breakout of the bull flag and this downtrend line and this alternative downtrend line with a big impulsive move up. And again, that's my first stop on this one for 10 or so. At that point, and here's a good thing, I like to share this and trade. It depends on when we get there, whether I would take profits on FSM, even my longer term positions. What I mean by that, well, let's just say that we hit it tomorrow or early next week with very little consolidation or give back in prices. Then we'll be quite overbought, very overbought in the near term. And at that point, I would put a much higher odds on a pullback off that level, or at least consolidation around that level, than I would if we did something like this. Let's just say tomorrow there's profit taking, and for the next week or so, and we consolidate here for a while, pull back, consolidate, we work off the near-term overbought conditions. Remember, I'm looking at a weekly chart here. You'd see it better on the daily. You're not overbought yet on the weekly chart, but you are on the daily. And then we move on up to 411. At that point, I might be more apt to just sit tight and wait for a breakout. Why? Because we've already worked off the overbought conditions, which then clear the path for a more sustainable breakout. However, when a stock rallies extremely overbought into resistance, there's a very good chance, even if you get a brief overshoot, that you're going to come back in and consolidate or pull back off that level. So that's my thought process. So keep it simple. If we come close to just over, I'll take profits a little shy of 411. If we hit it soon, then I'll jump out. Or what I might do, and I like to do a lot of times, is just raise my stops, because sometimes I'm pleasantly surprised. Let's say instead of selling it for that one, maybe let's say 405, 404, selling if we hit that, maybe I'll just set a stop loss at 390 or something. And then trail it up, and that way if we continue on through there, then great, can continue to build on the gains. So that's FSM. The other one I mentioned, other two were EXK, hasn't even yet broken out, still meat on the bone, although it's since I pointed it out in this falling wedge, it's rallied 40%. What was that? Today was another 10%. It's a weekly chart here. Again, I can't remember where exactly I pointed it out, but it was more than a week ago, so somewhere in here. And then ASM, that one's at resistance, and a pretty decent resistance. So again, it doesn't mean it can't go through there, but it's got work to do, because that is a pretty solid resistance level. As you can see, a lot of reactions at that point. but it's also a pretty powerful chart pattern. Strong bullish divergence on the weekly, breakout back test, and an impulsive move up. So we either consolidate or pull back here, or we punch on through, and then my next target's a downtrend line, and then after that, that 112 level. And there's what the resistance looks like on the daily chart of ASM. Oh yeah, let me look at SILJ, because that right now is the official proxy for the sector. It's a little bit easier, one shot fits all. You buy one security and you're covering most, if not all, the names I just covered and then some. So there it is. We hit our first target today. That was right here. The actual resistance level, as you can see, was 974. I had my target, as I always do, set a little bit below that, and we're coming right up now to that 1018 level. So this, I can say this meshes. This is something I do in trading. When I'm trading a security, individual stocks, or an ETF, a sector, like in this case, let's just say SILJ. Let's say this was my only position right now in the sector. I'll watch, which I'm doing that I just showed you, and I only gave you 4 of the names, but if I go through, I'll go through all the components and look at a lot of the silver mining stocks. If I see the vast majority all coming up and hitting resistance at the same time, or they're very close, that will further increase my convictions that we're going to have a reaction here. So as I just showed you, I had some, not all, but quite a few at or near resistance, while SILJ, when I put up the chart, I gave you these levels too, which were potential targets. I said they were significant enough resistance levels, or I wouldn't have mentioned them. I wouldn't have put them on the chart. And 1018, as you can see, is the next one. We closed at 1012 today. That's pretty darn close. It's a pretty solid level. You can see all the reactions why I have that level there. So what I was saying before, I think the odds are pretty decent. Today, tomorrow, well, today's over, tomorrow or early next week, especially if we get a little more upside, even if we overshoot those levels by a bit, I think the odds are pretty good for a reaction there. A reaction can be a consolidation or a pullback, either one. And should they power on through, then that opens the door to T2. So again, it comes back to your time frame. I'm not looking for a huge drop. If 3 weeks go by or whatever it is, and we happen to get that, and we pull back and back test this level, charts confirm, I'll be going long there. But I can tell you, I'm not going to give back that much in profits now. My stops have been raised on this one pretty tight. I just want to point that out. So you need to define your trading style. If you're a longer term investor, you want to ride out the pullbacks, and then you have to decide how much. What's your stop? What are you willing to give back to not get shaken out of this trade? Because again, everything that's happened this week only helped to firm up the longer term outlook. As much as these guys have rallied, they're coming off a vicious bear market. And if you just want to kind of get an idea how much, what could be the upside, well, look, since the bull market in the mine and gold and silver started, so far SILJ has hit a high of 1975. And so that's the first wave up in what I believe to be a new bull market. If we just get back to that 2016 high, that's another 100% from where we're at now. It's a double. We're going to go from $10 to about $20 on SILJ. So I'm trying to paint the big picture, and then you have to decide, okay, am I going to ride out a 5-10% pullback? And if you're shooting for 100% plus return, I think you need to do that. Otherwise, you're going to get shaken out somewhere along the way of point A to point B, if indeed that's where we're going. And at the end of the day, don't fall in love with a trade ever. That's the most important thing. Maybe all these beautiful charts, beautiful breakouts prove to be nothing but a whipsaw signal, and silver's about to take another dive down along with the silver mining stocks. So you just don't ever fall in love with a trade. Use stops, and those stops are going to depend on a lot of factors: your entry price, your price target, your risk tolerance, your trading style, everything else. Not what I put on here. I'm just giving you generalized stop levels that are based on the charts and the targets that I'm looking at. Okay, quickly we'll run through just a few of the other official trade ideas on the site. KHC, it's been a sleeper. You know, I've talked about this one quite a bit. We came within just a few pennies of the first target. It's a dividend paying stock, and I don't know, I'm sure there was a dividend paid since we opened the trade. I haven't even checked. If you adjust these targets by the amount of the dividend, in other words, if you collect, 5 cents per share or whatever it is, then essentially you could reduce your price target by that amount because you've reduced your cost basis by that amount. But we'll leave it alone for now. It's consolidating in this range. Nothing new to report until we either break above or below this recent trading range. And so is it my favorite now? No. Would I add to it right now? No. We're right above right below resistance, but still looks fine. There's no reason to change that. PAYX did a couple updates yesterday. Back tested that $96 level. So far it's rolled over. Still looks good as long as it remains below 86. It can pop it briefly, but I don't want to see a solid daily close above that level. But as of now, it still looks like an objective entry. Gosh, what are some of the other ones here? Yeah, I mentioned CBDS as a trade idea last week in the trading room before the breakout here, or right after it, or right before it broke out, ran up, hit my first target 194, pulled back, made a back test of the bullish falling wedge, couple back tests there, and it's moved higher since, and it took that level out. So it's above that, which was resistance, and now that should act as support with the next target up here, 233. So we're seeing some of the cannabis stocks move, not others. A lot of the crap stocks, if you will, the lower tiered stocks are, and the bigger ones are not doing well. So it's more of just kind of think it's a bear market rally and kind of the lower quality names right now. Plus that one was technical based that I just showed you. Here's MJ still setting up, but I'd be really interested if it can come on down here to about $28. That's pretty good support, or a solid breakout above the downtrend line. But until then, you're just spinning your wheels, I think, in the pot stocks. All right. QMCO, you know what, I was going to update that earlier today, and it was halfway to the first target. Now I didn't load it until right now. I didn't even look at it before the video, but that target's hit. So this one I passed along in the recent long trade ideas video as a break above 292 for a target of 339. That was hit today for about a 17% gain, and as often in this case, hit my first target, and we pulled back from there. Pretty decent pullback. So congrats to those of you that caught it. Volume's not been great. See the volume down here? I don't know if you can make virtually none. At that point, I would take the money and run if you didn't do it already today. But if it continues to move up and breaks above today's highs, then my next target up there is 429. Not one of my favorite high risk, lower price, low volume stock. That's why it's not an official trade, but I figured I'd update it. That's what I'm doing here, is passing along trade ideas on sectors, commodities, gold, silver, individual stocks, things that aren't the broad market, which has just been, like I said, trying to squeeze water from a rock lately, trying to make money in the broad market. GUI.to, Guyana Goldfields, they may have U.S. shares. The .to means trades on the Toronto. I gotta check that. I've just had this one charted for a while. That one took out that 123 level that I was watching. I covered that in the recent video of the mining stocks. Let's see here. I've got a couple others on my watch list that gave me alerts recently. I mentioned this one today is on watch for a potential official short trade. I'm watching it. We'll see. That may be added soon. That's SMG, Scott's Miracle-Gro. Let's see here. ADP, breakdown and back test. So that one's on watch too. But PPO is curling up right above the zero line, and that's once a trend is bullish, you usually get the PPO above the zero line, and that zero line can act as support during a bullish trend. So I'd like to see us come on down through there. I'll keep an eye on that one for now. All right, you know what? This video is getting pretty long. I didn't want it to go over half an hour, so I'm going to wrap it up here. There's no reason to do an extensive update on the broad markets. QQQ closed up a whopping 0.11% with SPY up 0.37. The market's pretty much, stalling out recently. All that happened today, remember we had those previous highs right here on QQQ from late April, early May. We broke out, we failed there, and then broke out, had that lackluster an impulsive breakout. So all we did today is come in and back test that level. We moved a little below it intraday, but on the daily chart we closed right back on it. Roughly, the line's not exact. I have it at 191.44. We closed at 192.42, close enough. So not much to report there, but the divergence is intact. PPO continues to roll over. I'm waiting to see bearish crossovers on the PPO and SPY, and I just might add this one back as an official trade here soon. Despite the fact the markets are asleep at the wheel, you get these bearish crossovers with everything else. Pretty good sell signals. So we'll hold off. I'm holding off for now. Microsoft reported tonight. Let the dust settle tomorrow, and I think we have some more FANGs coming up next week too. So once we get the bulk of the market-leading FANG stocks out of the way, I'll have a little more confidence in adding something like QQQ. Otherwise, we're likely to get whipped around and maybe have our stops run because of earnings season here. So we'll wrap it up here and pick this up tomorrow. This has been Randy Finney with the Right Side of the Chart. Hope you enjoyed it.